This morning, our Eye on Money series is taking on investments. Investors have been on a roller coaster for the past month. Some of us are worried that a larger sell-off of stocks could be coming. CBS News business analyst Jill Schlesinger is here with what you need to know to protect your money. Jill, good morning.
Good morning.
Okay, the Dow has seen triple-digit swings in 11 of 16 trading sessions. What's going on?
Well, starting about a month ago, people were really concerned about global growth slowing, specifically in Europe and in China. And the fear was that just as our recovery is taking hold here in the U.S., we get dragged back down with the rest of the globe. I should point out that we have had a relatively calm first 8.5 months of the year. So when you look at those jigs and jags of the market, it's more that we haven't seen it so much this year. Not that it's so rare, but we were a bit lulled into some complacency.
Yeah.
Go ahead.
You say don't panic. How do you not panic when you see your money slipping away?
Well, I think it's very hard. I want to be clear that some of these moves can start to scare you, but that's emotion, right? So what do you do when you're really worried? You rely on your game plan. And I have 3 big tips for you. Number 1, cash is king. When people have enough emergency reserve, they tend not to panic when the markets are going down. Number 2, planning. She's your queen. If you've done adequate planning ahead of time, then you really should be okay weathering these market ups and downs. And finally, we'll do the rest of your royal family. Diversification and rebalancing. Rebalancing is really important. That means that every quarter or every 6 months, you go in and make sure that your allocation, maybe 50 stocks, 50 bonds, is still in line. A lot of retirement plans actually offer auto rebalancing. They do it for you literally on a quarterly basis.
Cash plan diversify.
Cash plan diversify. And by the way, I'd be very clear about this. One of the problems with volatile markets is that you can start to really look at your plan and say, oh my God, I don't want to do this. Well, if Warren Buffett, who, by the way, lost $2 billion in 2 days, can make mistakes. We all can make mistakes.
He didn't really make a mistake. I mean,
No.
Warren Buffett has long-term holdings, and so 2 of those holdings declined.
Yeah.
He's betting on the long term.
Absolutely.
That it'll come back.
And so what is that? That's a great mantra for us, right? If you're a long-term investor, you're in it for the long term. Rely on your game plan. And you know what? Not every investment is a winner.
And invest in good companies over the long run.
Absolutely.
Thank you, Jill.
Thank you, Jill.
All right, Charlie's saying, wait a minute.
Wait a minute.
Wait a minute. Warren Buffett knows what he's doing. Wait a minute.
He sure does.
But that's exactly Jill's point. What she's saying, if Warren Buffett can ride this out,
Yeah,
we can't.
We're okay. The rest of us jamokes are all right.
He has a bigger cushion than the most of them.